Merry Christmas, traders. So, this post was inspired by something related to the dollar, and I'll get to that in just a moment. But first, I wanted to shout out my friend on TradingView, Drewby, for drawing this cute little picture of Santa Claus looking at a chart. That's adorable. You guys should check him out. He does great updates. And the dollar this year, we had this low back in March in this pandemic spike. And then we broke it sometime in July, the low right there. And I forecasted that we probably, over the next 2 years, eventually get down to the next support on the dollar. Now, the dollar index is the futures for the dollar as it correlates to other currencies in the world. So it's a good measurement of what the dollar's purchasing power is relative to other currencies. It's not necessarily a great judge of inflation, but we can definitely see how in the last 2 months, just from November, that drop has definitely accelerated. And you can see this by looking at some of the other dollar related pairs. This is the Aussie dollar. What about the New Zealand dollar? And of course, the euro dollar. So across the world, the dollar is getting less valuable to other currencies. And that makes sense because we're printing it like it's going out of style. The headline read just a few weeks ago that a quarter, probably more now, of all dollars, in other words, the money that's out there in circulation, has been printed just in the last year. And we've increased the money supply by more than a quarter. And the Fed's own statistics show that. I mean, we've seen inflation and money supply go up, 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 up. But really, just in this last year, it's become almost a hockey stick of acceleration. That looks like a cryptocurrency on the way up. Now, inflation is something that is normally tried to keep in check because you don't want the price of goods to skyrocket, and that's not good for consumers. And I was really brought to that attention this Christmas season because, like a lot of Americans, one of our traditions is we sit around and watch Christmas movies. And one of those movies that we watch is Home Alone. And there was a scene in Home Alone that I thought was kind of funny. And since I've watched it for every year, now this year, when I think about it, when I'm going out and buying groceries, it makes a lot of sense. So let's just watch it real quick.
Are those microwave dinners any good?
I don't know.
I'll give him €1. For the kids. Hold on, I got a coupon for that. It was in the paper this morning.
1983.
Okay.
1983, $19.83. Now, when can you buy this much in groceries for under $20? Well, it's been quite a while. And if we look, that movie was made in 1990. $19.83. In today's dollars, that's about $40. It's almost twice as much to buy that 30 years later, which that makes sense. Typically, inflation means that prices will double every 30 years. Or said another way, the dollar will lose half its value every 30 years. Now, what it's going to do in the near future, well, it's definitely going to continue to inflate, but will that accelerate over the next few decades? I think it probably will. And that's just something we'll have to deal with. But for right now, enjoy the holiday season. Wishing you all the best and a happy new year. See you in the next video.